I just started my recording a little bit late, so didn't miss much. Just me talking about where I am in my experience and what the effort of these live streams is. So moving on. So higher time frame stuff is important. You definitely need to figure out how that fits into the bigger picture and use that because there's a lot of information there that's pertinent. Good morning to Simon, Paradise, Sanibel. I miss anybody? Boyo. Good to see y'all. Before you got here, I was saying I'm waiting for the 9 o'clock hour to start, or 10 o'clock New York to start looking for a trade. This first few minutes can be crazy. If this gets a lot of people to want to go long, and then a lot of times it just turns around and reverses and chops them up. So it feels like you're missing something, but you've got to get rid of the feeling of missing out, the FOMO. There's going to be, I guarantee there'll be 5, 6, maybe 7, 8 opportunities in a good New York session on a Friday to pick up a trade. I mean, there's just all kinds of stuff that's going to be going on. Some days are better than others, but like I said, there's no lack of opportunity. So when you see something like this, just be patient. Just watch it go and recognize that what goes up is going to come down, and we're going to look for levels of liquidity up here to be taken, and ideally it will reverse out of a higher time frame PD array, and then you kind of mix that into your criteria. You have to see that price is always going to, it's not going to turn around for no reason. ICT says it's doing one of two things. It's taking liquidity or rebalancing inefficiencies. So we kind of try to put all that together into a trade plan and then look for that to play out for our entries. And like right here on the 1 minute, we can see we pulled into a 1 minute fair value gap, didn't violate it. It's turning around a little bit. Usually this isn't the top when it screams up like this. This is just going to be a small retracement to try to get people to go short. And what happens often is it'll go up here and make a couple more and maybe go out to the side a little bit. That's what I'm used to seeing. It doesn't have to happen, but I don't automatically try to get in immediately when it turns around, because I found that a lot of times this is just a minor retracement, a pullback. If we were to, good morning Bartaz, how's name, Chef Panda. Man, got a good crew for a Friday. Anyway, so kind of paying attention to this just to see. We still got 20 minutes before I can even consider anything. I'd like to see it play around up here for a while, and then give me an opportunity to come back down. But it could come all the way back down, and then give me an opportunity down here to go long. So you just got to take what it gives to you. Hasnain, did I get this breaker right? Hasnain is our resident phone trading expert and breaker block guy, so I'm going to refer to him. Is that close for the 5 minute? If it goes up, comes down, you take the high point on a bullish breaker. And I'm treating it like an order block. I'm putting the low at the open and not using the wick. So like I said, this is stuff I'm still working out. I've got some really good people helping me learn this stuff, and I plan to make a lot of progress and do well. Didn't make a lower low. So for a bullish one, it has to make a lower low. Well, let's get rid of that. Okay. So we have to come up, make a high, and then a lower low, then that qualifies it as a breaker. Needs to sweep liquidity. Okay, good deal. So then on the other side, if it's bearish, let me try to find a good example of a bearish. So this would be a bearish one here, right? Took liquidity, becomes a breaker up here. It seems like the same thing. It takes liquidity this way. Bearish is high, low, higher high. High, low, higher high. Okay. Makes sense. Ders, D-E-R-S, welcome. I don't think I've seen you before. Y'all missed the disclaimer, so I haven't been doing this very long, so I don't encourage you to just jump in on a trade just because I did. I'm not Jade Cat. I'm just doing this to try to help people who are, less progressed than I am. So there's people in here that are far beyond me, so I will ask them questions and try to get information and learn for myself too, because this is a great way for me to learn as well. So like I said, this didn't hold. So if I would have went short up here, it did come down here, and kind of act like it was coming down, but then it come back up. So that's something, it's something that repeats often that I've noticed, and it saved me from jumping into stuff and getting tore up. And it did come down here and tap this fair value gap. At some point, that's going to be an entry for me on these big pushes like this when it comes back down, and I know it's going back up most likely. I'll try to capture some of that. Just very small risk right here for a point would have already got me 6.5 points. So this is a pattern you want to kind of recognize when it screams off out of the open like this, and then drops back into some form of fair value gap. The stronger the move, usually the less it's going to come back down sometimes. When it's really powerful, it's going to dip, here, maybe here, but I don't expect it to drop all the way back down here. Not saying it can't, just after watching this over and over and over, that's something I've noticed, that, you just try to remember that stuff, and then you start keeping an eye out for it, and as it repeats over and over and over, then you get confidence and you start taking trades on it. That's really what it's all about, is chart time, excuse me, experience, seeing things play out over time, and then over time you build that confidence. You've seen something happen enough, and you're like, well, you know what, I've seen this happen a lot, I'll risk a point right there for 6 or 7. So real quick, I'm going to do something a little different. I was watching the video from T-Trades, and he maps out the hourly candle from 9 to 10, which is going to be this one. And he uses that high and that low for his criteria for entering the silver bullet trade. So I usually look for external liquidity, which would be these session levels up here, London, previous days, things like that. But I just want to see how it plays out, because he did some back testing on it, and he went through, I don't know how many trades, it was, weeks, using a 2 to 3 hour stop loss target, and it did really, really well. And I watched him literally just go through day after day after day using that 9 o'clock, 10 o'clock candle as a high and a low for entries for the silver bullet. But watching somebody do something and doing it yourself is two different things. You don't build the same level of confidence and trust in something watching videos. It's really about you getting in and going through the charts yourself and establishing, yes, this is true, or kind of shaky, I don't know if I trust that. Because it's your money at the end of the day that you have to put on the line. So the more confidence you have, the ability to pull the trigger when you need to, that's important. So I was watching ICT videos last night. I watched episode 9 from 2022, and I got some really good information and some confirmation of some things that I had kind of already been doing. So it was good to hear him repeat that. But he said if you get a big move in London or overnight from like 2 to 5, anywhere in there, your New York AM session is going to be hairy. It could be. And that's kind of what we're seeing right here. Now we're in the building liquidity mode. And it's funny that that happened the same day I was watching the video, that he said that, because I didn't really know that. I've heard him talk about that. If there's a big move, then the next session is probably going to be a lot of consolidation. So I've got that in my mind too. He says the AM session, you're better off just skipping it and then waiting for PM after the consolidation. But since we're all here, we'll just kind of go through and see what develops. I'm not in any hurry to take anything cheesy. So if it is a consolidation type day and nothing presents itself, then I just won't take a trade in this hour. But I will be back this afternoon because I love Friday afternoon. I love the last 15 minutes of the session. Hello, TG1. First time I think I've seen you. Hey, Ronnie, how's it going? Ryan, what's up, brother? Yeah, London. So ICT said if there's to look for a big move between 2 and 5. And if you see, a big, and this is literally between 2 and 5. I mean, from 2 to 5, this is a pretty substantial move. And that's a pretty good range. He says that the AM session after that for New York will tend to be like kind of what we're seeing right here. It opened up. Now we're kind of going sideways. Lots of wicks, lots of chop. The example he showed specifically didn't have this big, bull rush at the beginning. So this might change something. I don't know. We got a good move. Maybe it does do something, but I'm kind of on my toes for being careful for the consolidation because he basically explained that's a place where you can pretty much dump your account and have a lot of problems just trying to take trades in here. I mean, you can see there's just nothing here. And once it breaks out of consolidation, we're going to get a fake probably. We'll get some inducement, and it's just a tricky place to try to take a trade. So, Selt Disc, good morning. I don't think I called you yet. I think I got everybody now. That's what it looks like. It's a good crowd for a Friday. Right on. So big move in London. Yeah, he didn't really necessarily name how many points, but I think Jess said something about 2.5 times the, I don't even know what to call it wrong, the wrong thing, ATR or something ADR maybe. There's some kind of a range that they use to sort of measure what a big move is to make that judgment. But this looks substantial to me. So we still got about 12 minutes before the silver bullet hour starts. So I'm going to go over a real quick entry that I saw this morning. That was a silver bullet type move. Played out really nicely. Right here. So, we're getting this dump, and it comes down out of London. It's continually coming down, down, down. And the first time we really get a signal is right here. We get this, we had liquidity, each one of these lows is liquidity being taken if you look, to the left. There's some here, all down here. Well, eventually it comes all the way down into this 5-minute fair value gap. So we've got our first criteria. We're in a higher time frame PDA. So that's step one. And then we're over here on the minute, and if I would have drew that out on the 5-minute, it would have looked something like this. Okay, so that's this 5-minute fair value gap transposed over on the 1-minute chart. So we dig deep into this 5-minute fair value gap. Okay, step one. Step two then is we're looking for displacement and a break of structure. So as price action is developing, we get this nice big push right here. And this gives us this break of structure right here. If that creates a fair value gap, then this is what we're looking for an entry. When it comes back into this fair value gap, sometimes it'll be 1, sometimes it'll be 2, and you have to decide for you which one you want to take. Sometimes if you just take the first one, it's going to dip all the way down to the second one. You're going to feel some pain, for drawdown. But on the other side of that, if you wait for the second one, sometimes it'll hit the first one and take off. I usually use the energy of this candle to tell me if it's really powerful and it just makes another really powerful one, then I feel pretty confident getting in on the first fair value gap. But say there was another one down here and this was just kind of a, an average move, then not a whole ton of energy, then I might have waited for this move back here to come back. This would have tapped into the second fair value gap, and then I would have took it. Now this would have been a painful trade, but what you have to understand is when those criteria are met, it means something. It means the market is tipping its hand And a direction of change is high probability, and we're looking for the high probability stuff. Doesn't matter how ugly it is, how many times it comes back against you. Ideally, this is what you're looking for right here. You're looking for this move, and even I think this move you get paid on. I'll measure it here in a second. But so the idea with market structure is you've got a low, you've got a high, you've got a low or a higher low, and then you have a higher high. This low created this high. It broke this high. So I consider this sort of a protected low. And what's funny is that depending on which contract you're looking at, there's just a hair of a difference right here. On next month's contract, I'm still on this month's contract. On next month's contract, this was a protected low. But you can see over here that it didn't hold on this one. So there is a tick or two difference between these contracts. And depending on how much distance we have, like, we'll measure this out real quick. I'd like to start with 5 points for my stop loss. So say I was going to go right here. Take this fair value gap right there, entry, and plenty of room. Plenty of room. I would have just come down here a tick or two under this swing. If I'd had to choose with my 5 points, I still would have felt safe with this one. Just because of the fact that the market structure showed this as potentially a protected low. But for the sake of argument, anytime you can get under this swing, that's going to be your best place. So for 2.5 points, I'm in a great spot. I'm real confident that's not coming back. And then 5 points is going to be where I'm going to try to take a partial. So looking at this, yeah. I mean, you could go up a little bit more, but my runner is going to take that anyway from there on. So I just want to get my 5 points. That's my target. And then it does mess around here quite a bit, and you just have to sit through this sometimes. This is just, they don't all just take off and pay you. You're going to have to deal with some of this, and you have to expect it. You have to be prepared for it, and, just wait it out, because eventually, and depending on what your break-even threshold is, you might have even took this as a break-even trade. Like normally, if I go 3 points and go break-even, I would have been break-even on this pullback here, because it would have got my 3, but not my 5. So I'm trying to debate. Some of the people that have done some really good back testing on this say you can really just go for at least a 1 hour trade with 5 points, and you're going to win a very high percentage of them. So, and I found that to be true also. And if I was strictly on my cash account, that's what I would do. But trading with the prop firm and, drawdown on unrealized profits kind of changes the way you have to approach. Whoa, what was that? What was that? How's name? You hit something. Anyway, yeah, with Apex, you're charged on, if a trade goes, into profit and then comes back against you, that goes against your drawdown. And if you're trading prop firm money in multiple accounts, drawdown is the only number that matters. Okay, you can win every trade you take and still blow your accounts because you went into profit and came back. So knowing that a break-even trade isn't great, I'm trying to see if maybe I just use my 5 points and stay away from break-even and get the win, because eventually it would have been a nice win. So here we've got,
and leave it how it is, and until we can potentially entry forming the nuts, know my camera back on. But
are you talking to me? All right, I'm gonna turn you down a little bit. All right, so big push down, dropped into the lower fair value gap now, coming back up. This doesn't count as a structure shift for me. I'd need to see, and it depends. This, to some people this counts. I like to see a body close below that low before I really trust it. But this could very well be, the move back down. And if I miss it by 4 minutes, it just is what it is. But I still don't trust it. I just don't trust it. So we'll see. We've got these kind of equal highs up here. So lots of liquidity still. A lot of times on the big push like this, it's not unheard of for it to come back down quite a bit. I mean, if you fib this and you look for your retracement, we're not even at 50% yet. So we would expect, even if it's going to go higher, we would still expect it to come down in here somewhere at the minimum. And then even as low as down here somewhere into the optimum trade entry. So it almost got to 50%. We'll see if it does. If it does, maybe I jump in. What the heck? It's 2 micros. That's not going to make or break me. Let's see if we can get to the median of the fair value gap first, or the mean threshold. Oh, okay, new soundboard.
Order filled.
Alright, so I took a little order entry right there. I don't feel terrible about it if it goes the other way. So I switched over to MES since I'm trading MES. That way you can kind of see how this works. I've got a bracket order set up, an automatic bracket order. So if I get to 3 points, it's going to bring me up to break even. And then take my partial at 5, and this one I can move and kind of decide what I want to do. I probably wouldn't go much above this right now because there's no guarantee, you know, what it's going to do, but so again, we'll pull the fib out. And this is kind of what you expect, is on a retracement. And I sort of use the energy of the initial move to kind of determine how far I think it's going to come back. On this one, I just wanted to see the mean threshold of this fair value gap, which was in discount. Could have came all the way down here and I wouldn't have panicked. I think if I would have closed this fair value gap here, I probably would have just got out of the trade. But let's see what it does. This isn't a silver bullet trade. I just saw something and kind of grabbed it. So a lot of times in this hour, I don't get an opportunity to even take a trade because I'm waiting on that silver bullet. And so for the people who are trying to see trade management and stuff like that, I just jumped into this one. The worst I was going to lose was $50, I think. 2 contracts, yeah, 2 contracts, 5 points would have been $50. I made 140 on the last 5 minutes last night of New York, so I'm still on. Either way, I'm good. So I'd like to see it build another fair value gap, a bullish one here. That would give me a little more better feeling if it did. It doesn't have to, but. And this could easily be just a retracement on the way to a bigger move down. So you just don't know. But you play the probabilities, your percentages, things like that. You know, the fib tells you a lot. So I'm going to get my partial here, maybe. We got a fair value gap down here for support. I really want to see this. I don't want to see this one closed. It's not actually a PDA yet. We got one down here though. It is complete, but we want to see this hold. So it's going to push.
Order filled.
Okay, so I got my partial. I'm at break even here now. I'm a tick above break even. And now it's all about just looking for something up in this area here, you know, whatever I want to put it. I'm going to trail the stop. Trailing the stop is kind of tricky on this. There we go. I'm going to go 2 ticks below this fair value gap. I'm going to stay 1 PDA below price action. Once this one's complete, then I'll go a couple ticks below this PDA. But ideally, since we took this high out here, we'll see. That was a big push and then a pullback. Sometimes that's sort of indicative of like a stop hunt, but it looks like it's still wanting to ride. So we'll just, you know, kind of play it up. Here in 25 seconds, this will be a completed fair value gap. I'll move up to 2 ticks below this fair value gap, just under this candle right here. And the expectation is that when price is bullish like this, these PDAs will hold. For a while. Eventually, obviously, it has to fall, but. So it did close this one. But we're still pushing nice. So if we get above this, I still expect some more consolidation. Next would be 44.71.5. Right. Yeah, right here. Right up in here is the next area for liquidity. I can probably see it better on the 5-minute. So 69 is right there. That would be London high. Uh, 69, yep. So I'm going to take that if it goes to there and just call that a good trade for right now. I still
Order filled.
Come back down. So I'm going to try to catch it coming back down also. And that'll be the silver bullet trade if it presents itself. So that was a nice, easy trade off of a fib retracement into discount on a big move. Check and cancel any open orders. I'm on my cash account, so I'm using the bracket orders. Thanks, Hasnain. I'm using the bracket orders. It's all automatic, so I don't have to worry about that. But I do have the window open. I'm using this little window here to help me keep track of what's a working order and what's a filled order and what have you. So for those that don't know, I trashed my evals because I left an order open and it ran all day. I went to bed at 8:30 and it just ran through the New York close. I woke up to a nearing liquidation message, which is not what you want to find. So anyway, that was a $60-$70 trade on a $600-something account. So that was a 10% gain on my cash account right there, and it was pretty painless. So this is a great move. And yes, I missed out some, but like I said, I'm looking for base hits and mental capital, and I got my win. Feel good. Could have turned around at any time. You don't know where it's going to go. I saw the London high, and I felt like that could be a place where it turns. So it looks like it's going to reach up to this previous day high, but then that's a great opportunity now for a short on the silver bullet. So we'll pay real close attention. Those levels count as much as a PDRA. I mean, on a higher time frame, there's probably something up there if we go look. Like here on the 60-minute, we're actually pulling into a fair value gap with the previous day's high. So there's a real solid confluence here for an eventual turnaround. We see how it pushes up. Not a ton more else after that on the 60-minute. It'd be interesting to see if we can get a body close over the mean threshold of this fair value gap. If we do, then we would kind of see what happens when we hit this new week opening gap over here. Nice move back down. Yep. That's what we're playing. Squanto Squints. Stun. First time here, I think. Gazulia. Welcome, you guys. Glad to have you. For those that missed it, I've been doing this a little over a year, so be careful trying to jump in on a trade with me. I'm here to learn just as much as you guys are. I'm just trying to help the people who are just starting out. So I know this is beneficial to them. If you're an expert, you're probably not going to learn a lot, but you can provide tips like Hasnain does. He gives me help all the time. So previous day high hit, good sign. Now that I know I'm in a fair value gap over here, as well as have reached this previous day high, I go back to this time frame and start hunting for reversals. And like I said, I've got this screen open so I can see that over here, but you guys can't see what I'm looking at. So every once in a while I'll pop it back up. Here's the 60 minute. We're also about to reach into something on the 4 hour. And on the daily, we're coming up on the mean threshold of this fair value gap. So lots of reasons for it to turn around. We're definitely bearish at this point. So looks like it could be a good day for the silver bullet if we can catch one. So I was going to do what I said I was going to do on the hourly. He takes I don't know how he would do that because it's not inside. I'm already outside. Yeah, I guess as soon as it breaks, yeah, that's it. It broke this high already. So on the hourly candle, ooh, that's ugly. That counts as a, well, it's a liquidity raid anyway. So he's looking for shorts at this time too, so I'm just going to get rid of that. We already know we're in that territory where we're looking for a reversal, so that's what it's all about. Morning, Blavsky. I don't think I hollered at you yet. A lot of people have joined in the last week. I was surprised. Some of you may have came over from Paul's Discord. That's unfortunate what happened over there, but it is what it is. We're glad to have you over here. So now it's just a waiting game. Eventually I'll get to where I'm trading NQ and ES at the same time, and when I get into this sort of holding pattern here, start looking for, you know, what's happening on ES. I used to keep the SMT open between the two of them, but I had too many screens going on, and so this is a weird place because you're not going to get a market structure shift or break a structure until you get all the way down here, technically. But I think if you violate enough fair value gaps on the downside, that would count. So I would count this as a fair value gap if it reaches up into it, even though there's no technical break of structure. However, if you go to the 30-second, sometimes you can get a little better look on something. Like here would be a market structure shift on the 30-second. If I would have got displacement here, I wouldn't have had to go all the way down here to get that swing low broken. If I would have got a body close on the 30-second, I could have looked at that. But it looks like we might get what we want on the minute. I don't know that that's solid yet, though, honestly. Let's see what it does. I'm not in any hurry to just take something. I really want to make sure it's solid. So, okay, so we have a fair value gap up here. We violated, and these are kind of babies, so, you know, maybe kind of look at the 5 minute for a better idea here. I've also got the DR indicator here, so we'll kind of talk about that stuff too as the day progresses, trading DR. So is this the top? Well, it certainly could be. But let's pull the fib. We're looking for what's a reasonable retracement on this price leg. So we're in 50%. So trying to decide long or short when you're right here is tricky, because that 50% could just be the retracement before the continuation, or you could just be blowing through it all the way back down. So you just have to take your signals. I'm taking this as not yet the high because it punched straight up and came right back down, and I don't usually trust that because a lot of people went short here, and if we're talking about liquidity and the algorithm and the market dynamics that ICT explains, then we're going to look for, fakes, inducement, get people to go short, come back against them. We'll know right here if we get a strong rejection out of this fair value gap, then it is a reversal. but I like to see it kind of make several moves up here, create some swings. It's really early in the day also, so lots of time for it to play around and try to generate liquidity, which is what the market does. Oh, right on, Boyo. Yep. Yeah, I'm good, Blasky. Hope you got everything figured out. I know how that goes. Life happens. But yeah, Boyo, his name is Adam, and he actually lives here near me. So we get together on occasion. We've had a few beers and, drug our laptops up to DJ's dugout and we went over charts and stuff. He's on his stuff, man. I mean, you're going to learn a lot from him. And he's a great guy too. So just all the way around. We've had some really good laughs because we talked about our failures together, and we've done some of the same stuff that was just ridiculous as far as, stuff you don't want to do as traders. Neither one of us have been doing this for, 5-10 years, so we've got some newbie mistakes that are still fresh on our minds that we talk about. And even as experienced traders, you're still going to make some of those mistakes. So don't think that it's, becomes a smooth ride just right away. So it looks like we might violate this 3 seconds to close above that. So yeah, I'm glad I didn't try to take the short on this fair value gap. It appears that we're still going to push up a little bit, which is fine because now I have a really nice swing low here that's a lot higher than here that I can use for my break of structure. So as of right now, normally what I'll do is I'll put a little line somewhere and I'll call it break of structure. And then as new swings are created, I just move this line. So in order for me to take any kind of a trade, I need to see a body close past the most recent break of structure. If I'm calling it a silver bullet, obviously. This first trade I took was not a silver bullet. It was just a good high probability retracement into a fair value gap and into discount. So those concepts are gold if you use them. Hey Ron, good to see you. Trading Republic, how's it going? Right on, Jamie. Yep. He just posted the link here not long ago, so we've seen an influx from a couple different places. There's another Discord where the owner pretty much just went AWOL on everybody. There's 300 members in there, and he decided to go trade a different strategy and didn't say a word to anybody. They were in the Discord talking about, well, we hope he's okay, don't know where he's at, and I did a little detective work and found out he was posting on another Discord right up to that day, and he's been gone for a couple months. So anyway, we put our link up in there, and just as an opportunity for people to have an option. They didn't have any direction there. So yeah, I know, right? I wanted to say something to the guy. I wanted to post in that other Discord and say, you're a piece of crap, man, but I don't want to stir up stuff and start Twitter wars and all that. I just felt better about I was able to provide the information and let people know that he was okay in case they were actually worried about him. He had something going on over there. And he was really quite a YouTuber too. I mean, I've watched some of his videos, and to see him just bail like that was really something else. It's surreal. Oh, you came from my YouTube? Right on. My DR Lens video? Well, I canceled my DR Lens subscription. When I first found that, I was so new that I didn't understand price action. I didn't understand market structure. And I thought DR Lens was showing me something magic. And what I came to find out is really that DR Lens is just pointing to high probability areas where these are already at. And if you understand price action and market structure and liquidity, you can find them without, using the database. In fact, it's more accurate than the database in most cases. But I still encourage people to join the Academy, if they've got the funds. It's a great community. They've got a lot of neat stuff going on over there as far as metrics and rule-based approaches where you can learn a lot, and it'll make you a really rounded trader. So I don't have anything bad to say about them. I promoted their stuff, and I'm not sad that I did. I just think I might have found a better way for me to push forward. Being honest with y'all at the same time. So okay, so it looks like this is just going according to plan. You know, we got this push up here. We got inducement, get people to go short. They're all crying right now because they're getting stopped out. And now, like I said, we've got this swing down here. We may build another one a little higher, which would be, the higher the swing is, the better for me, because it gives me an early entry, an earlier entry. If I want to come down here and target this down here, I don't want to start here, obviously. This is above 50%, but by the time I get my break of structure, my fair value gap, and my retest, I could be down here somewhere. So if eventually I can get a swing built up here somewhere, then I've got a lot of room for, you know, a drop, a failed swing, a continuation down, a retrace, all of that stuff. And I can still be up here with a nice bit of room to run to carry my trade all the way down here. Because ideally, eventually today, maybe, you know, what you're looking for on a Friday is for something like this to get took out down here, or on any day. I mean, this is what we got our eyes on. There's not a lot for us up here. So if it does start coming back, you know, we're going to take partials here, set our runner, and try to get something down here. So that's the plan. You know, every day is a little bit different, but in my mind, as I'm seeing price develop, I'm trying to figure out, okay, what is it that I think is probably going to happen? And then I try to plan for that. We've still got a long way to go. We got lunch. You know, it could come down here before lunch and end up back up here by the end of the day. I've told myself, don't ever say the market can't do that. This is in play. This is in play, believe it or not. It's crazy, but it's made moves that just made my jaw drop. So I don't ever discount anything anymore, and I just watch what's happening right now and then take what it's going to give me. So maybe this is the point where we get, you know, a bunch of consolidation or, you know, sideways stuff for a little while, but we'll just have to see. Anybody got any questions about anything while we're chilling here? How's it going, Vince? I think you're new also. Sebastian, how's it going? Ronky, where have you been? I haven't seen you in here in a while. I don't know if you can hear me, but yeah, he was in here a lot when I first started this.
Hi there, Mark.
Hey, good to see you.
Good to see you.
Yep, glad you're back.
Been busy a couple of days, but
I know how it goes.
glad to be back.
Right, good to have you. Excuse me. So what else? Let's see. Just kind of see where we're at. Always flipping around. I like to know when we're close to these median thresholds, consequent encroachment, whichever one you want to call it, on higher time frames. That's another place where, you know, you kind of start measuring when it gets up here. Does it close above it? Okay, if it closes above it, then the next line that's in play would be the top of the fair value gap. Does it close above that? If it just wicks above it, you're still bearish. If you get a close above that, then you could be targeting something up here. So it's just a process of candle by candle analysis, really, and looking for interactions with these different PDAs, different levels. You know, New York AM pushing up. Yeah, sure, no problem. BOS is break a structure, and it's, depending on who you ask, there's different ideas about the difference between a break a structure and a market structure shift and a change of character. I've seen them used interchangeably. I've seen ICT use them interchangeably, and maybe I'm missing a detail, I don't know. But basically you get these swing lows, and then you get swing highs, and you get swing lows, swing highs, swing lows, and swing highs. So right now the nearest swing low under us is right here. So if the market turned around and dropped, it doesn't really signal anything as far as a change in the market's direction until it breaks and closes under this. So it can fall hard right here. That doesn't mean it's a change of direction. It doesn't even mean it's thinking about a change of direction. But once you see this, a break of structure, it's like the market tipping its hand, and it always comes before a reversal. So There's no way you can get a reversal without a break of structure first. So we're always paying attention to that. If you get your displacement through the break of structure and the fair value gap, you put all of that together and it's a real strong signal that that fair value gap is probably going to be your ticket to a continuation to the downside. But before the break of structure, there's no trade. So that's why I want to see, like right here, I think I might have another swing. If you expand it enough, you can make anything a swing, but I don't know. I mean, it doesn't look like it. It looks like these two are equal, so I wouldn't take it. You can't. If you cheat, you're just cheating yourself. I mean, if I want to get into a trade bad enough, I can fib something on a different time frame and make it in discount. But that's not the way you want to do it. So the real obvious change of direction would be right here. Yeah, the market structure shift itself is going to be more of a dominant structure shift. So like right now, if it broke this would technically be, let me see. Yeah, this low creates this low creates a high that breaks this high. So if it came all the way back down here at this point, that would be a market structure shift. If you get a little swing up here that's not as dominant of a point, that's more of what I used to call a break of structure. Because it is a break of structure, but it's not a market structure shift. This is just what you get when you get a retracement. A small retracement causes a swing low, and you get those, everywhere. If we went to a different, something with more of a move. I was trying to find one going up. So here, here's a swing low right here, right? But it's not dominant. In other words, it doesn't have near the power that something like this does that went up if it would have created a new low. It's a lot more substantial of a signal. This is just something you expect. You get them, here's another one, a little swing low. So when you're looking for a move, just a silver bullet move, that's enough. That break of structure, that's enough. That tells you possible short-term reversal type thing. The break in market structure on a higher time frame is more of a, okay, we're heading in a new direction now. It could be, days, especially if you're like on an hour time frame or something like that. So there's some good market structure videos. I don't know exactly where I have them. I may have already posted them. It's something we're going to put in the playbook for you guys. We're creating a sort of an A to Z guide for beginners, and it'll help advanced people too. But it's going to have links to what we think are the really clear, good videos to understand stuff like market structure shift, PD arrays, you name it, and they'll be in there. If someone wants one sooner and they message me, I'll make sure I get it for them. But market structure is something you got to have to be able to identify that, to know, and it's helpful too, because if I go to like the hourly time frame, when you're in a, like, here's a good example. So this low right here made a high that broke this high. And I don't know if you could say this one did or not. Either one, just to say. This move down signaled a change in market direction, okay? This was a market structure shift. You had a low create a new high, and then that low gets violated. So this is a strong low. It took smart money, a lot of money to push that up and make a new high. So when it comes down and it's violated, that's a signal that the market has changed direction. And even though you get this move here, it did change direction, but you're always going to get the reversals. You're always going to get the retracements. You're always going to get the fakes. You're always going to get the stop hunts, because all these people are going short. They see this. They're like, oh, yay, we're coming all the way down here. Well, no, you got to fade this first. So, but you can see that the signal was true even if you had this to deal with. And if you were looking for your entry, here's your fair value gap. You got break of structure right here, breaks this swing. So here would have been your entry off of this structure break. You wait for this is the 2022 model, basically a failed swing, more displacement. You're in a new week opening gap and a fair value gap. Oh, that's money. Stop loss right here. You're looking at, well, we're on the hourly, so we would see this and we'd dial down into the smaller time frames to get a tighter entry. But this is a move that lasts for days, and every time you get this push up, if you don't get a new structure break, you know this is just a retracement. You haven't broke structure yet, market structure. You're still coming down. So it's a really great way to find high probability opportunities on these retracements when you can identify the direction of the market on a higher time frame, if that makes sense. So that's what I've been learning here recently. So now we're getting this push on the 60-minute coming up to the middle. I'm just going to call it the middle of the fair value gap here. It's more technical if I say consequent encroachment or mean threshold, but some people will say, no, that's the consequent encroachment, and other people will say, no, that's the mean threshold. So Mark from Omaha just calls it the middle. And it looks kind of ugly on the 1 minute, but it's just kind of bleeding its way up. The market's the MSS FOMO. Yeah, FOMO is a dirty word here. We don't do FOMO. I'm going to switch back to ES now. I'm still on the current contract for now. If I get back into a trade, then I'll switch back over, but I'd rather chart on ES. So somewhere up here, I don't know why this isn't showing up. Hold on. Let me do a reset here. I'm expecting to see my new week opening gap over here. Oh, I know what it is. This one goes back too far for the 1 minute chart. So what I've been having to do in order to get it on the minute chart is extend it. Now it should be right there. There we go. And then there's two of them in there actually, but I'm not going to draw them both. I'm going to put the middle of both on there. And that way I'll just have an idea of which is the middle point of both of them. There we go. So 44.84, 84.75. There we go. All right. So what are we looking at over here for liquidity? Nothing really. Kind of in a, I got a fair value gap coming up. So it could turn at any time. I mean, liquidity's been taken and a substantial amount of liquidity, but we generally look for it to move into a higher time frame PD array before it turns around, and most likely on one of the other time frames it's already in one if we look hard enough. Yeah, so we're already in here. So even though this is why this is important, because if you're looking at this on the minute chart and you're saying, well, it has to come up here first. No, it could turn around right here. It could turn around and dump right here, because on another time frame you're actually coming into or already into other PD arrays. So on the 30-minute, we're just now tapping this fair value gap. On the hourly, we're approaching the middle of this fair value gap. So, and we're on the daily, we're also just coming up over the middle of that one, and on the 4 hour. So it's definitely going to turn around. It's definitely going to turn around. I don't know how else to say it. When you get that kind of confluence, that's really solid. There's no way it just goes up the rest of the day. I'd be very surprised.
Every time.
I know.
How's it going, Jesse? I think you're new also. Who else? Yeah, so we're just sort of, okay, so we got DR confirmation now. For those that are, trying to trade DR, we've got our DR range right here. We look for first candle to close above the DR top or bottom after that hour, and that sets the range, which tells us, and this is the most, for me, this is the most powerful part about DR. I will still use DR. I'm still going to incorporate it in my trading. You may have seen that we've got a DR backtesting session coming up where we're going over some stuff where we're going to trade DR without DR lens. We're going to use these PD arrays. We're going to go back and backtest the probabilities of taking entries off of these fair value gaps for the retracements. So far, it really looks good, and I've got a lot of confidence that that's going to be something that's usable for sure. But what that tells you is once you get this confirmation here, you've got a high percentage chance. I'm not going to say it's 88 because it varies by instrument, it varies by day. For instance, today, true, long, Friday, confirmation time at 10:30. It's 82% true right here. So we got day, Friday, DR true, long, confirmation time in this window. So what that tells me is there's an 82% chance that price does not come down here and close below this line. Doesn't mean it can't wick through it, and sometimes if you're trying to trade that retirement center, you need to be a point under, especially in New York, or whatever your risk threshold is. I like to give it a point. Some people give it a tick, but I've seen it wick through, and it doesn't count as a false day unless it closes below, so it can wick through. But anyway, that's kind of what you use as your session bias, and it is good. I mean, I expect price to come back down in here and retrace down to this fair value gap right here, and then take back off at some point. I'll just have to see. Maybe another fair value gap could be created, and it could go beyond it and retrace to that, and that would also count. But we just have to see. So technically, we've got a break of structure on the 1 minute right here. We got displacement. We got a fair value gap. This is probably going to be our 10 o'clock silver bullet, I hope. So I'm going to get on my screen over here for this one. I'm going to put a limit order 1 tick below this fair value gap once it's created. And then put my stop up here. And it's really, I'm going to have about, my 5 points is going to carry me over that. And I don't know, we'll see. I kind of use the energy of these candles. If it's a big wick candle for the third candle, I'm not as likely to just jump in. I've been faked. A lot of times this will still come up and go again, and then you'll get a drop and a failed swing, and the failed swing is the one you want to eventually take your target on. Not terrible, but this counts. So waiting for just a hair more pop up, and bam.
Order filled.
I may have jumped on this one, but since I've got the win on my back already, I'm okay with it. So my 5 points put me perfectly right here. I got in 1 tick below because sometimes that 1 tick will, the trade will get away from you and it'll never come back. So we'll see what happens. Because it made so many of these different little pops up and down, I'm a little more confident than if it would have happened here. And it did give me this higher opportunity for a break of structure, which I said was important. So now's the pain part, where it's going to come way up here and play around, and I might get stopped out. I'm going to go two ticks. So I'm 5 1/4 points. Sometimes it just dumps, and it's an easy, low resistance type trade that doesn't give you a lot of trouble, and then sometimes you get the full push back up. And on a big trend like this, your odds are this is better when it's already been up and sideways for a little while, I think. On a big trend though, this could have just been the inducement move. But I have that C trade, take trade up here for a reason. I've found that for my own mentality, if I take this trade and I lose, I'm fine. I won't skip a beat. I won't, there's no regrets. There's no hard feelings. I'm not going to lose any sleep. I was an amazing trader for this trade. Everything's mechanical from here. I don't second guess anything. My criteria were all met. Everything was met. And this is really important for me. to have that mentality, because it's the times when we let the trade get away that then causes us to go in and do something stupid, right? We saw our trade, we didn't take it, and we're like, dang, man, I missed that. Well, speaking for myself, I don't wait for the next A plus setup. I get in on the next bozo move and try to get that money back, because I feel like I lost it. So if I don't get this trade, it's not going to give me any type of feeling bad or anything that I have to, do something crazy to feel good about. Could be a breaker block as well. Unicorn entry. I would love for it to be a unicorn entry. But yeah, that's for me to spot those at this point. Not there yet. So if we can get to 3 points, we'll get a break even. This will drop down to here. I think I set my break even for 4 points now, just because it's New York, and a lot of times 3 points isn't going to be enough. So anyway, so I went back when I had some problems and blew an account up. I went back and looked at my process and my mentality and all the things that happened, and I realized that I saw a trade. I talked myself out of a trade that I should have took because there were some equal highs above me, and I thought, well, most likely, it's going to come back up for those equal highs, and it didn't. It ran for 20 points or whatever, and then I was just kicking myself. I was like, man, why didn't you take that trade? And in reflection, I went back and I said, this is something I back tested, and it doesn't matter if there were equal highs above me. It didn't matter if there were, for everybody that's below me. When these criteria are met, it's a high probability trade, and it's the only high probability trade I have. I don't have anything else in my toolbox that matches the odds of this trade. So for me not to take it and take something else just didn't really make a lot of sense. So I decided to just, when I see it, I'm just going to take it. And, more times than not, it's going to work out. And when it doesn't work out, I still took my shot. I was disciplined. I was patient. I followed everything I was supposed to do. There's nothing else I can do as a trader. There really isn't. There's no reason for me to feel bad if that trade fails. You're going to lose. ICT loses. He's probably in the same trade right now, right? This is this good of a trade as far as the criteria that he points out to us. Everything is there. The displacement, the break of structure. We're coming out of a nice liquidity run. We're in some higher time frame PD arrays. On the 5 minute, we got a nice stop hunt up there, pushing up, up here. So everything just screams take the trade. But now's the part where we got to see if it's a winning trade or not, which I have no control over. The only thing I control is my consistency, my discipline, my patience. And if I do those things, then it doesn't matter if I win or lose. It's not about. I had to get out of the mindset that it's about the money. It's about the consistency. It's about the precision in following your plan, that you've tested and established and recognized as your model, your setup. Well, this for me, this is it. So I'm not trying to scout nothing. I'm not trying to chase anything. Life is good right now, no matter what happens. So we just have to see if I get paid or not. I'd be surprised if it just gives me what I want right here, but we can expect a retracement. The fib is a great tool to use for your peace of mind too, because I expect price to come up into here somewhere before finally dumping. I mean, that's what could happen before I would start to say, maybe I should I cancel it or whatever? And I won't. I'll ride this until I get stopped out, because I've had it go right up to that top point and a tick beyond and dump. So, I'm in it to win it right here, regardless. There's no moving anything. I don't move it up. I don't move it down. And that's another thing, moving the stop. Yeah, sure, I've gotten stopped right here and it turned around and ran for 20 points, but you can't use that as your method for determining where your stop is. You can't push it up and say, well, I know it's going to turn eventually. Maybe I'll give it up here, right? Give it plenty of room. The problem is once you get this move here, past that, your thesis is wrong. It's telling you that that's not going to happen. All right, so now I'm at break even and a tick. So it's a winning trade for me no matter what. I'm on a cash account, so it's a winning trade no matter what. If I was on my, my evals, then the drawdown would be counting against me if it turned around, take me from profit. Can I get one tick? Can I get one tick? That's the hardest part.
Order filled.
Okay. So now we're in money. We're at break even. We're going to try to trail this down to the next level of liquidity here. If it comes back against me, it is what it is. I got half my money and the tick, so that's, it's a great trade. And it will sometimes. Sometimes that's the end of it. You're just done, and that's fine. You paid the trader, you got money, you're into the next trade. You're waiting for your same A+ setup again. Everything's good. There's no reason to feel bad about anything on break even or a partial. But there's going to be times when you get this, right? And as it gets closer to this, then I start trailing this and moving this down, right? As I get close to here, I'd move down to the next level of liquidity and bring my stop down. Maybe, as new fair value gaps are created, I would use those as support. Well, let's see what happens. Anybody got any questions about anything while we're waiting this out? Hey, JM Hawk, I see you're new. Glad you're here. Alpha Bear, I don't know if I recognize you yet, but good to see you. Trader Bobo, what's up, man? I love the name. If you can name yourself Trader Bobo, you're serious about this stuff. All right, so here comes our, our pushback. Got two fair value gaps in between me and my stop. Break structure can go away. Feel pretty good about the location here. I think that should hold. At least get me down to here. Let's move that down a little bit just in case. I don't want to get tagged out here. I want to give it the opportunity to reach this spot and then monitor my stop or my final target a little bit better. But eventually this will get pushed down. If we break this swing, start heading down this way, then I'll start moving this down to protect what I've got. And I could pull it a tick or two above this, but I think I'm so close right now that... Why won't it let me move that? Oh, there we go. Yeah. So I like it right where it's at. It gives me a little wick through on this fair value gap right here. And I'm still a tick over, so that covers my commissions or spread or whatever. Always add your, if you go break even, don't go straight to break even. Go break even plus 1 or 2. And that's something ICD Kraken teaches also. Because you don't want to lose. It's a losing trade if you break even because you got to pay the fees. So at least get that tick back, and that covers the spread. So again, put the fib on current price leg. Okay, so here's our 50% line. We expect it to go up here. I'm in OTE area right here with my stop, so if it would have came up into the OTE area, I would have got stopped out. But really all we're looking for is just something over equilibrium for a retracement. 50% is going to be very common. You have to be able to fade that, prepare for that, recognize it. Don't get anxious because that's what it's always going to do. You're never just, well, I'm not going to say never, but sometimes it will just dump straight. It's, I've caught a couple of those that are really nice. 2 1-minute candles and you're down here somewhere. It's lovely. But more times than not, you're going to have to deal with this right here and plan for the level of retracement that it's going to come up into, and just recognize that and be okay with it. And I could have even maybe moved here. Either way, we're over 50%, so I'm expecting it to turn back around. We've made a lot of ground up, so it just seems like there's plenty of room to run. We never got a DR confirmation to the long side, did we not? We wicked through, but no close above, so that's great for our short position. If you would have got a close above this, then that'd be more of a continuation. But since we didn't, probably we're going to attack this low down here. So here's what's good to know also. There's a 92% chance or so. Today it's 95.9% chance that we're going to get a confirmation. For it to confirm now, it either has to confirm here or confirm here. So this is either part of a greater retracement on the 5 minute and eventually it's going to turn back around, which it could do, or it works its way back down here and confirms down here. Right now I'm thinking it's going to come back up just because the trend we were in. We're in a really strong trend. Either way though, I win, so it's, I don't care. It can go either way. Obviously I want it to go down just for the larger win, but I need to get a little bit more distance before I start pulling my stop down. When I do pull my stop down, I'll be a couple ticks above this swing right here. But I want to break. I want to get a little closer to this first. I'm not convinced yet. Because we're going to get some consolidation. If we get some consolidation sideways, then before it drops more, it's going to move up. It's going to induce people to go long, and then it's going to turn around and make the move back down. So I have to have a little bit of room above the area of consolidation, which we're going to make that box right here. For right now, this is our highs and lows of the consolidation. So depending on how long it goes sideways, before it comes down, it will definitely come up here and take this out. And that's what I have to have this space up here for. So I'm not going to move it down yet. I shouldn't say always. let me qualify that. Nothing is 100% because as soon as we find something that's 100%, we would always capitalize on it and we would beat the market. So they can't give us ever anything like that. If you find something that's 100%, send me a DM. I'm usually just speaking in percentages and probabilities and what I've seen the most and what my experience is, and usually from consolidation, because it is, you got to make up in your mind if you believe this is an algorithm controlling this or if this is random buying and selling pressure. Well, I pretty much told you what it was going to do. The top wasn't the top. The break was the down. If it was random, you wouldn't be able to get a handle on it. It would always just be some random schmuck stuff, just moving around and, go up, go down, way up, never stop, for a day because everybody's buying. But this is a controlled environment. This is a program that's written to create liquidity, sweep liquidity, create liquidity, sweep liquidity. If it wasn't for that, the banks and the hedge funds, they wouldn't have orders. They wouldn't be able to get into the market. They need our orders. They have to create liquidity so that they can take that liquidity and push price somewhere to where they can make money. That's the stock market. And I didn't know that until I started listening to ICT. If you're not sure on that, you need to dig into it and figure that out for yourself, because it's drastically going to affect the way you approach the market. If you think it's random, what do you base your decisions on? What do you have confidence in? How do you have confidence in something that's random? How do you backtest something and prove something that has high probability of repeating if it's just all random? That's the way I kind of look at it. So because I've identified these things that happen over and over and over, and it plays along with the idea of the algorithm, it makes sense. Let's see here. So are we going to respect this fair value gap? I can handle a little wick through, but not much. That's going to be it. Pop. Okay.
Stop filled.
So a little tight on the stop, but that's where it has to be. And most likely it turns around here and continues to the downside. Now, I could be tempted to get back in, but since we violated this fair value gap, we violated this fair value gap, yeah, I think that's probably it. As much as I expected that, if that's what it does, it's irritating, but at the same time, it was all according to my plan. I lost exactly what I planned to lose. I put everything in the best spot to where I thought was the best probabilities. Yeah, I could have moved my thing up, but how far up, right? How high does this go? Do I want to get stopped out here, or do I want to get stopped out here somewhere? You know what I'm saying? So everything according to that trading plan was, in my mind, I managed it perfectly. And no matter what happens from here, it doesn't matter, right? Maybe I would have got lucky and it turned around and, you know, whatever. But maybe it runs up here to this mean threshold of this fair value gap, and then I'm pushing my stop up, and I take a huge loss, and I lose all the money that I gained on my partial. This way, my partial's secured, and my commission for that one tick. I took the win over here, and it's a great day, man. There's nothing, and I got the afternoon session. We're going to slay tonight, man. The afternoon session is where I usually do the best in that last 15 minutes of the session. So if you want to see some crazy trading, come back around 2:45 or whatever. I'm going to try to do the last 2 hours, but if you can stick it out for that last 15 minutes of the session, and I'll show you why. Because according to DR Lens, max extension, and this, I don't need DR Lens to tell me this anymore. This is always like this now. You're going to have a max extension possibility in the last 15 minutes of the session, and a high probability of a max retracement. So in the last 30 minutes, last hour of the session, I'm setting up, according to this idea, what I think it's going to be. And you'll kind of be able to tell if it's going to be the retracement side or the, yeah, right. That's going to be my moniker, man. I want to be the last 15-minute guy. If I can come in and, with 20 accounts and just blast my last 15 minutes and catch 5 points and make $5,000 a couple times a week, that's the way I want to trade, right? That's the way I want to do it. But anyway, so this gives me the confidence to know, kind of looking at how the price action is at the end of the day, what it's going to do. And sometimes I caught it yesterday. I mean, yesterday's a great example. I'll show you that. Let's go to so here was last night, end of the session. There was a London levels over here, and I expected that to push up into here somewhere. This move happened so quick. I didn't have a target up here. I was just kind of playing it by as quick as my finger could go. And this shot up so quick and back. I mean, it was like a half a second. It just went bip, 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 and came back. And that's indicative of a stop hunt liquidity grab. And there's a reversal coming. I see this a lot. And I've talked to people, if you watch me trade it live, I'll say, okay, watch for this. And a lot of times this is what it'll do. So I caught it coming up, taking the high. Are you not seeing the stream?
Don't worry, that's what I was trying to tell you.
Okay, let me see what I did. Reconnect. Oh, I created another Discord window. Okay, so tell me which. I better close that other window. There we go. All right, are you seeing my cursor on the chart?
It doesn't say your live stream yet. It just says your voice.
Okay. So let me reshare my screen. How about that?
It's loading, but yeah, we're good.
Okay, good. So maybe I'll just pull this screen over and then do this. Okay, now you're still seeing my screen? Okay. So end of the session yesterday, there was London levels over here, and this move here was so fast that it pushed straight up and back down before I could exit. So I didn't catch as much of it as I would have liked to. By the time I hit my exit all button, I was right here. But I had 2 contracts in right here. So it went up, came down, I got in again right here, and then as it shot back up, I pulled the trigger right here. Well, I know what this is, and I knew these relative equal lows are right here. And the end of the session is all about, many times, it's about just grabbing huge amounts of liquidity in the last couple candles sometimes. So as soon as I saw this, then I went short again with, I don't know, a couple more, I think. I don't know if that's a group of 2 or whatever. But I went short immediately after, and carried this all the way back down to these relative equal lows. And this was pretty much the end of the, this is 245, 311. So right in here is 3 o'clock. This is like 2 candles before the end of the day. So end of the session can be profitable, and I don't want to say it's not hard to trade. It's just once you do it, if you do it a lot and you see these same little patterns happen, it's something you can definitely make some money on. My best trades have been in the last 15 minutes of the session where I just absolutely killed it, trading with some size. I was confident it was going to do what I thought it was going to do, and it did. And those are the ones you want to win. They make up for a whole lot of the other ones that you lose. So anyway, that's the silver bullet hour. I'm not looking to take anything else right now. I got my trades, and now we're into this slop. Kind of hard to see. It still feels like it's bearish just because of the, from this point here until we get a break above something like this or here. I still feel like this is, this maybe this break here. I don't know. But yeah, that's the hour. So I'm going to call it for now. I'm going to do some studying and check out some more ICT videos, and I'll be back here at 2 o'clock New York time, and I'll get back on live for a little bit. Okay? Anybody got any questions before I go? About what we just did? Silver bullet stuff? TG1. Saw my question above about the indicator on your fair value gap. Sure. This is a great indicator. I used to use fair value gap by Nephew Sam, and it's pretty good, but depending on how many indicators you're allowed, I'm using premium, so I've got as many as I want, but I found this other indicator from one of the guys in the group that is sort of a multi-indicator, and it's called Session Liquidity Tracker. It's this one right here. Let me get rid of this box. And the other one draws them out and extends them off your screen, and I don't have this free area here to kind of annotate stuff and keep track of all. It's just a lot cleaner if it comes right to where price is at. If you set that up, and it also gives you these previous days high low, and this is amazing on like the hourly. Look at that. I mean, look at how clean that is with your levels. I know I got fair value gaps here. That's one I created. Let me get rid of all my annotations. All this stuff here. It also comes with a new week opening gap indicator. So I had to draw over this one to get it on my minute chart because this one goes back far enough to where the minute doesn't carry it. So I extended it on the minute, and now it extends it on the others too. So if I wanted to fix that, it wouldn't be a big deal to go back to ES. And there's where's the one I drew out? I drew out one. Oh, wrong one. ESU. There we go. So yeah, all I would have to do is put that on this time limit or below, and now it'll no longer show up on my hourly. There we go. And sometimes you have to do a Control R to bring them up to the current price level. There, now everything's kind of even. That's a fair value gap right there. So anyway, Sessions Liquidity Tracker it's also called Session Range Highs and Lows Liquidity Tracker. I don't know why it says something different over here, but if you go in for the setup, you can pick your sessions. You can configure extra sessions. Say you want, I don't know, lunch or something. It's pretty configurable. This is the way I do it. I don't want to really see extend the unrated levels. I don't care about the unrated levels. Or wait, yeah I do. It's the rated levels. Yeah, this one I don't care about. I don't care about what's already been rated. But I want to extend the stuff that I'm still waiting to see get taken. A lot of this is just colors and stuff. I like to see previous day, previous week, midnight open, and you can also, if you want to see the 9:30 open, 8:30 open, or any time frame, whatever, Here you click show fair value gaps, and it gives your fair value gaps. I don't care about fair value gap mitigation. I've got a separate indicator that shows me fair value gap mitigation that's cleaner for me, so I can see the inverse fair value gaps. Like every time a fair value gets closed in, I get one of these little red boxes. So it's real quick for the eye for me just to see inverse fair value gaps across the board, and that's this one up here, imbalance Fender dynamic. So that gives me this right here. And then you can put you got your middle line for your fair value gaps, colors, all that stuff. And then new week opening gaps is right here. I want to see at least 10 of them, you know. It doesn't hurt. Price definitely responds to these. You can take trades off of them. It's an amazing PD array to use for interaction with price, so I would definitely suggest that. It also gives you the consequent encroachment of the new week opening gap. That's that EQ line, which is real handy to have. Because like I said, you're doing candle by candle analysis, and you're trying to plot where it's going based on where it's been, and once it closes over something, that tells you it's probably going farther. If you don't have that middle in there, you're kind of guesstimating a little bit, but the algorithm is not guesstimating, it's precise. I mean, it's to the tick. So if you have that stuff on your chart, then you'll also be, you know, you'll be equally precise. So yeah, that's it. That's a great indicator. Anything else? Is there a free DR? Yes, there is. I use it now. It's this one right here. This is the one I like. IDR with statistics, and it's by I thought it had his name in it somewhere. I would just try that, and yeah, DR, IDR, there's a couple of them, but I like this one. It was easier for me to just go in and change it back to the way, you know, I'm used to using it. And I don't use all the standard deviations anymore, or the internal grid, because I'm more focused on the price action aspect of it. So I don't need all that stuff. And you know, that's one thing about when I started with DR, IDR. Like I said, I explained that I thought it was magic and all this. And as I got into price action more, I realized that those standard deviations that it's talking about, all it's talking about is levels of liquidity. I mean, price doesn't go to the standard deviations, it goes to the liquidity. The database is just telling you in the past how many times it went to this level where there was liquidity, how many times it went to this level where there was liquidity, how many times it went to this level where there was liquidity. It's no secret magic thing that happens outside of price action. So for me, I'm better off targeting levels of liquidity and PD arrays and using, you know, higher time frame stuff to see where I think price is going to turn than the standard deviations, because it was just hit and miss for me. So when it worked and it seemed great, but you know, the win rate on that's not that great. So you make up for it with, you know, high risk to reward ratio type trades, but I can make that same risk to reward ratio myself taking these trades if I just decide to hold them longer. So anyway, that's the free one, and pretty easy to configure as well. Everything's pretty much default, and then you just tell it, you know, which lines you want to see. I like to see the top and the bottom, the middle, and the open price, and that's about it. And then how you configure it for best visibility on your screen. This is really all you need, is this box and this range to know which side it confirmed on, to then kind of get a bias for the day. But it doesn't always work, because here's a false day, right? If you would have went short here, the database was telling you to go short here, here, and here. There's several different buckets of probability, and as they fail, you know, you move up to the next one. Well, on false days, it hurts, because you know, you don't know it's going to be false until it is false. So you're planning for, you know, a big move down, and you start taking shorts here, and then you take the next bucket and the next bucket, and on false days it just sucks. So but yeah, eventually, you know, it did come down, but after a false day. So this looks like a false day also, but I'm on the 15 minute, so it's hard to say. That could be just a couple wicks or something. Line color, I think this one also gives you can also get fair value gaps with this one, and new week opening gaps. No, wait a minute, come on. There we go. One of them has fair value gaps built into it also. Okay, it was the other free one. And if you want to compare them, the other free one is this one, the Master Scout. If I turn that one on and this one off. So this is his version, and it's, you know, it's basically the same thing. Why I keep getting the liquidity tracker when I do that. There we go. This is the one with the fair value gaps on it. Yeah, this one you can get fair value gaps. You got an order block finder on it. You can still set alerts for the breaches. I used to have that, but every time it was going off, I was at work and my thing starts beeping, and I'm not using it as extensively as I was. So, two different ones: DR/IDR, the Master Scout, and then the 1.4. If you want to play with those and look at them. Hey, Mooncakey, Pelican, Pop. Y'all missed it. We had a great Silver Bullet session. I'm going to post the video, though. I'll put it in live stream. Hey, Tito, how's it going? So those are the two free indicators, and they'll give you all you need to use for the DR bias and, you know, this kind of free version of trading DR that we're trying to figure out. Anything else? Steak or burn, welcome. Like I said, lots of new faces. I'll be back on at 2 o'clock New York time. I'll do the last 2 hours. We'll see what we can get. Definitely been a good Friday so far, so hoping to make it a hat trick for the day if I can. Who's the author? Okay, so author for Sessions Liquidity. You know, I've been hearing that that's hard to find. I don't understand. I do recall when I tried to log in as not me, as a new account, I had a hard time finding it. So maybe, let me see if I can get some more information on it. So Assam Julian is the one for the session range high and low. But when I went to his page, he had no indicators for a minute. It looks like it's back now. So, oh, it's locked. What? Well, it says private chart. I don't know if that means it's locked. Let's see if it lets us add it. No, it doesn't look like it's... Okay, well, that's the guy, and this is an indicator that if he ever went to charge for it, I'd probably buy it because I'm really enjoying it. So that's the guy for the session range highs and lows. Maybe you got to go to his page and look for it. I don't know if it's locked, and because I've just had it loaded, it's stayed loaded. I don't know, but okay, you can't find the one under DR/IDR either. Okay, so I'll start with this one. I'll go to his page. Jurgen, he was in DR/IDR, and this one, I mean, you can do a ton of stuff with this one if you want all this information, but I got away from all the data points, and, you know, it's great if you want to use it, but I think price action is the same thing. So a lot of people think, you know, the data is sexy, and I thought it was too when I started. It was amazing to see it, you know, go up to a level that is a little number by it, and then it hits and turns around. But if you look to the left, there's a reason why it turned around. And if once you understand that, then it makes as much sense. You can do it either way. Is this where we make confessions? I went short too early and got stopped out with size. Were you watching the stream? We went over that Silver Bullet just as clean as I could do it. And then the other one is the Master Scout Pro Mucka. This is his Promukaj. Like I said, either one of them are good. The basics is really all you need unless you have DR Lens. So if you have DR Lens, then you'll have the free version or the paid version as well. So unless you do the ICT plus DR, they don't give you the latest version of Drive, which is the DR indicator, which I don't understand. If you're paying $90 a month, you should get the latest version of the indicator. But for whatever reason, it doesn't work out that way. Okay, so I think I gave you the names of everybody and the places where to look, so hopefully you can find it from there. If not, I will have to do some checking to figure out where they went to, because it doesn't make sense. Yeah, and there's nothing wrong with that. I mean, when it says, the higher it's, the only thing is you've got those different, if you're trying to look at a target for a standard deviation, max extension, well, this happened 7 times, this happened 5 times, this happened 6 times, this happened 5 times. That's a huge range to try to figure out where your standard deviation is. Somewhere in there's a level of liquidity or a PD array, and you just go find it, and then that's your high point. This is over 20 years. You did this a few times. But for me, it's just got easier to just go find the liquidity. The market's going after liquidity. The database tells you where the liquidity was in the past, but I can actually go tell you where it is today. And that's what helps me today, is I need to know where it's going to be today, not where it happened a lot in the last 20 years. It does give you a feeling of accuracy because, in 20 years it went to this place more than it went to this place. But, I mean, that's still a little bit of subjectivity, more than I want to deal with. But yeah, I mean, everybody's going to have their way to approach this stuff. There's no wrong way, using data, using PD arrays. You find there's people killing it with both ways. So we're here to support both sides of it. I just want to make sure everybody's clear that, try to find what works the best for you and saves you the most money if possible. Anything else? I see Chef Panda typing now. Hold up. I mean, I got plenty of time to chit chat. I wasn't going to trade anymore. So as long as you got questions, we'll get them answered. High time frame liquidity dashboard. Oh, trade for opportunity. Yeah, he's got great indicators. I mean, no doubt. So everybody, if you can't find the other guys, and there's probably something that works close or as well. This one just is the latest one I found, and it gives me everything I need. So, and I really like the look of it as far as giving me this, views of the different highs and stuff. Good morning, Crystal. Finally had a killer session, 2 for 2.
Good morning.
Yep. Did you get any trades? There were some good opportunities there.
No, I slept in today out of necessity.
Oh, sleep is a weapon. I know it. I'm finally caught up a little bit. So yeah, I feel great. I was up last night watching ICT. I slept most of the day yesterday. So
Good for you.
Be raring to go this afternoon, and I'm gonna cut this recording because I don't want it to go 2 hours long. Me jabbering.